Welcome to the Clear Diagnostics Tax CPA Success Show, where we share updates on current tax law, operational stories from the tax practice of our virtual CFO firm, and anything else tax related that comes from being a leading distributed virtual CFO firm. If you're a CPA in tax practice who wants to learn strategies to minimize taxes for your clients, then this podcast is for you.
Welcome to the Clear Diagnostic Tax Podcast. So we've got a great episode with a couple of guests here today. So joining us today, Jen Bolton is a senior tax attorney at Leyton, USA, Inc. And Maggie Crowley is the head of strategic development, head of strategic partnerships, also at Leyton, Inc. We've also got Dave Danek, who is a tax director here at Summit CPA Group. And I'm Tom Waddleton, one of the full-time virtual CFOs here at Summit CPA Group. So Dave, I'll start with you. R&D tax credits. Yeah. And we offer R&D tax credit to our clients. And do you want to tell a little bit about our story that may be similar to many of the people watching?
Yeah, sure. Yeah, thanks, Tom. R&D tax credits were one of those things like when we were really growing as a firm, probably about 6 or 7 years ago. It was one of those things where it's like we had a client come to us like, oh, I heard about the R&D credit. And then another one came, and then it started to be like this feeding frenzy of saying, wait, if this person can claim it, why can't I claim it? So it was one of it was a credit that we didn't have much exposure to just based upon our client base at that time frame of our firm's history. And then I started diving into it. And I would spend hours upon hours of trying to figure out the credit. We claimed a handful of credits for our clients, and I thought we did a decent job. But after a while, it was like, I feel like someone else knows this a lot more than I do. And it's probably better for our client in terms of, you know, having an accurate tax return and things of that nature, someone who knows all the rules in and out, and then also probably getting a bigger credit. So that's where we started working and partnering with other companies to help just really be a bit better support for us to give us confidence going forward. And that's where we run into groups such as Leyton, and where we're like, okay, these people know what they're doing. So thanks, Jen and Maggie, for being here and being supports to us and our clients and things of that nature. So Jen or Maggie, like, I'm sure you run into a lot of CPAs like me who wish they knew everything, but they just can't. So how does that work when you partner with a CPA group, or what do you find that CPAs might be missing when it comes to client service and the R&D credit?
I think it's kind of a two-pronged answer. A lot of CPA firms don't necessarily know just how many industries can qualify for the R&D tax credit. I mean, and same with consumers. There are so many people that when they think R&D tax credit, they think that it's white lab coats, people doing like playing with test tubes and doing experiments, but it's pretty broad. There's no limit, but I would say there are approximately like 70 industries that qualify for the R&D tax credit, ranging from dentistry to engineering to manufacturing, software, life sciences. So it's really applicable to a broad group. So I think when it comes to CPAs and CPA firms, you guys are busy. And you don't necessarily have time to absorb that education about the R&D tax credit. And I mean, it's, as Jen knows, having done this for so many years, it's a thick part of the tax code. I don't know how many pages it is, but it's a lot. So it really, you need to take on that in a full scope, and you don't necessarily want to do this incorrectly because we are dealing with the IRS. So it does behoove people to outsource it and let us do the dirty work when it comes to the R&D tax credit.
And if I can also add, sometimes CPAs get a little nervous or apprehensive because they're not fully understanding what the research credit is about, how to claim it. So they're skeptical about how they want to prepare it or present it on a return. And they don't really, as Maggie said, have the time to spend really understanding what the requirements are, the technicalities, the qualifications. So having another firm that specializes in research credit services is very helpful because we're able to help the CPAs help their clients, which is basically the same goal that we all have in mind, trying to get bigger amounts of credits for our clients. We work together, so there's really no competition. It's a matter of achieving that same goal for our clients, maximizing the amount of their benefit.
Absolutely. Yeah, I was totally in that nervous camp at some point where just as I said, like there are two angles. One, you want to make sure you're doing it correctly. And for a lot of CPAs, we're generalists at times. Like, hey, I can be your general practitioner, but sometimes you need a cardiologist. So we're going to refer you to the cardiologist. And I think CPAs who are listening, like you don't want to, I don't see this as a sign of weakness. I see it as a sign of saying, hey, this is an opportunity for the benefit for the client, for sure. So what?
And
Yeah.
Dave, as you know, with our clients, I don't think I had any resistance from any client who said, why can't you do this as part of your service? Why do you have to bring in someone else?
Yeah.
They liked the idea of the credit, and we were part of it. It wasn't just a cold handoff of saying, hey, why don't you give someone like Leyton a call? We were in the meetings, and as there are data requests, we were pulling the information that we could.
Mm-hmm.
A lot of it dealt with what people were doing, and some of that got into time entry that we can't pull for them.
Mm-hmm.
But much of it, we kind of walked along with them, and they were very happy to have a partner helping us through that.
And that's exactly what we do as well. We're a team, is how we look at it. We're a whole team for the client, and we interact together so that the CPAs are also involved and understand, number one, our process, how we're going about claiming it, who qualifies, so they get that comfort level where they're not just getting a draft form where they say, okay, let's just input the information. They feel comfortable because they've sat with us as well. They've done the meetings. They get a better understanding so that when they are putting the tax return together, they're able to file it knowing that they have a group of individuals who are well-versed in what the requirements are for claiming the credit.
Yeah.
And we continue to stay abreast of the credit, which, you know, I'm sure we'll get into in a little bit because changes are on the horizon.
Yeah. Yeah, I've been seeing things like that come across my email and some of these tax updates, and I always say, I'll look at that later. And so who knows? What would you say is it? Well, this coming from my experience is one of the hardest things for claiming the R&D credit for our clients is making sure like their activities actually qualify for that. What would you say from a process, like how do you go through the process with your CPAs and or the clients to one making sure that they do qualify? Because I think it's one of those things where everyone feels like, well, if my buddy Tom can claim it, then I should be able to claim it. And it kind of feels like if they don't claim it, then they feel like, well, maybe my CPA is not working hard enough. So what does Leyton do to make sure that they're qualifying for it in the correct way?
Yeah, so what we do is we have a couple of conference calls, emails, where we explain what the criteria is. And we also have a request where we ask for different types of projects that they worked on for the years that we're claiming. And then we have what's called a scoping call, where we really start getting into the different activities for the individuals that were working on a project. And so there have been times where clients thought projects qualify and we determined that they did not. There have been other times where clients don't know that a project did qualify. And so we really just discuss what did you do during that time period? What types of projects were you working on? We go through what's called the 4-part test, which is how you qualify. We walk them through the test. We take all their projects and we do a walkthrough of who was doing what. We explain the criteria. We explain who is able to be qualified so that they really feel comfortable as well that their activities that are being input in the computation qualify. As I've mentioned before, there are times where certain departments or certain projects themselves do not qualify, and we will explain that. We've had clients sometimes say, well, improving the health of our scientists, we have a gym and we'd like to be able to claim that gym because that is an indirect type of expense, and we have to explain we understand that improving their health and is being supportive, but that doesn't qualify. You know, we do see people try to come up with creative ways, which we don't come up with the creative ways. We really want to stay within the letter of the law so that we feel comfortable that the activities that are being claimed are qualified according to the code, the regulations, and other guidance.
Yeah. So,
Another
sorry, Maggie.
thing, sorry, I just wanted to add on one thing that really sets us apart from some other firms are the people that we have doing this work and qualifying it. It's not just our great staff of accounting professionals and other CPAs, but we also have those who have expertise within various different industries. So we have doctors, scientists, engineers, software experts, you name it. We have those people on staff so that they are truly understanding the activities that our clients are doing so that we are 100% sure that the activities we're qualifying will meet that 4-part test that Jen referenced.
Okay. Yeah, that's good.
And it becomes a really fun experience for our clients. They end up getting to like nerd out on the stuff that they are passionate about.
Yeah.
And so do
with
we.
someone else who's passionate about it. It becomes fun.
Yeah.
We don't often hear like, ooh, what a fun tax call that was. But we do often get that remark. This was a fun tax call.
Yeah. So when would a CPA come to Leyton? Like what part? Like, is it just when I'm thinking about the R&D credit, or when I think the client has something that qualifies? I'm guessing it's early out. I'm
Really?
guessing it's early in the process.
A lot of times we will find that CPAs right around this time of year are doing planning or they're beginning to file taxes. So we'll have an influx of referrals from CPAs. But I mean, let's say you take on a new client and you think they might be a good fit. It's worth having a chat with us. I wouldn't say there's necessarily a wrong time to inquire about the R&D tax credit because it is retroactive. And if you've never claimed, you can look back by 3 years. So there's always opportunity to take a look.
Yeah, I don't like that rule. While it's nice for our
Why
clients,
not?
I filed enough amended tax returns for the R&D credit than I need to, and I'm ready to be more proactive. So, goodness.
It's not very client focused with the dollars they get back, Dave. But I agree, it's a ton of work when it's done.
No, it was totally the right move for the client, but at the same time, it was like, okay, we got caught up. Good. All right, now let's do this on the same year. So let's do it.
Well, that's what's the benefit, that if you're able to get clients on the ball right from the get-go, you don't have to do the look back because then it becomes something that we look at on a yearly basis because the credit is incremental. And typically clients are continuing to work on projects, whether it's a continuation of a project or they're doing new projects. And another important factor that people don't understand, you don't have to be successful. As I've tell clients, failures are great. You know, it may not be great for the company or for their boss, but it's great for the research credit because it shows that you actually went through a process of experimentation, which is one of those 4-part tests that are required. Because if it was so easy and you were able to do it, there really isn't that growth for that research. It doesn't have to be innovative to the world, doesn't have to be something that is strictly patentable. It can be new to that specific company, but failures are good because it does show that you're not able to achieve that result right from the get-go. So people tend to forget that. And so when we do talk about projects as well, we talk about ones that not only are successful, but that have failed.
Yeah, that's right.
You know, when we talked about CPAs coming and saying who are candidates, one of the things I did that I assume you would do similar if I'm a CPA thinking about this is I sat down with another firm before getting the clients involved and went through like 15 clients. And they gave me a little bit of criteria, but I went through them and said, here's what the client does, and here's why I think they probably do or don't qualify. And got some of that initial view where we ended up prioritizing probably a third of them where they said, these look like the very best candidates to go after. I assume that's a similar process rather than me deciding, it's okay, here's one that I know qualifies. Having an expert like you that you could sit down and kind of quickly go through and probably get rid of some and also find others that make sense.
Oh, absolutely. And it's also industry-wise. You know, most industries, as Maggie was saying, could potentially claim. So it's some clients you can pretty much eliminate right from the get-go because you can see that they're not doing the research or they've contracted out with somebody else and they don't have the rights to that research. So there are certain industries or companies that you can kind of say when you look through the list, not sure that they'd be a good candidate,
Yep.
or that they only have one employee. What's really going to be the benefit of that as well? So sometimes it's a matter of just taking an initial look and being able to eliminate, rather than every single client that you look at, say, hey, there's potential for research credit. We are also able to help assist CPAs if they're interested in getting that basic knowledge, because as Maggie can talk to, we do put on certain programs so that we help educate CPAs and get a learning. They don't have to do the research credit, but understand what to look out for so that they can help identify good prospective clients.
Yeah, for sure.
Yep.
Good.
So we put on a number of webinars and roundtables, forums. I think it adds such value to a CPA as an individual or as a firm, because you're taking this proactive approach to your client's business, and it definitely, it certainly adds value to their business, and then validity to your business as a CPA. You become sort of like a one-stop shop. You've got, you can handle their general books, their R&D tax credit, ERC, reverse sales tax. You've got all the bells and whistles. Without actually having to have all the bells and whistles.
Yeah, and that's kind of like when we have our candidates going through the CFO course. That's what we teach them, right, Tom? Is like sometimes you just have to be the quarterback, and start getting the right players on the field, so the business can move forward. So you talked about education.
Absolutely.
Now, here's one tax-centric CPA that needs some education. And Jen, I know you've been reading a lot on this, but what are these new rules coming with the R&D tax credit? We've got another filing season coming up. I'm getting all these news bursts that says there's changes to the R&D credit. What are we in for? I just kind of want something to stay the same, but we're not going to have that luxury.
There's always change, Dave.
Yes,
That's
I know.
how life works. We can't stay constant. There are two significant changes effective for 2022. One is it's effective for tax filings for 2022, so that they don't really have an effect until you file the 2022 tax returns in 2023. But it's something to be aware of. Is actually all the way from the Trump administration. It was in legislation that he put in the Tax Jobs Act way back to be effective for 2022. And it's the 174 research expenditures. Prior to 2022 tax filing, companies could take the expense of a research credit, of a research expenditure rather, and fully expense it. They had to do some other significant add backs that we could talk about, but they were able to take that full expense. Effective for 2022 tax filings, you're no longer going to be able to do that. If you want to claim the research credit, you're going to need to amortize those expenditures over a 5-year period using a half-year depreciation method, and you are going to have to include software costs. Those are now going to be part of these expenditures. So it has a significant impact because of the fact you're going to really need to keep track of the 174 expenses for research credit. And I think the best way is to provide an example. If you had an employee who was engaged in research activities fully, so that you'd look at their salary and say their salary was a full $100,000 and you were going to claim them, before you could expense it under 162, which is ordinary necessary business expense, or you could expense it under 174 as a research cost. You really didn't need to segregate it. But now for the 2022 filings, you would have to take that employee's expenses of $100,000. You couldn't claim it under 162 as a wage expense. You would have to amortize it over 5 years under 174 if you want to be able to claim it for the research credit. So $20,000 is all you would get for the 2022 tax year, and then
Now, is that
$20,000.
now we're really tax nerding out. So if there was any listeners that
Yes.
dropped off, then we don't like it, but we understand. But that's okay. So hang with. So is that related to like the add back of the once you get the credit? So say if I get a credit of $100,000, And in the past, is like you had to
Yeah, but
add
now
that
it's
back.
a little different.
Yeah.
If you didn't make the 280
Yeah.
election, the 280C election, yes, but it's also the fact that now what you're amortizing,
Mm-hmm.
you would be adding back as opposed to
Okay.
the full expense amount.
Oh, yeah.
So yeah,
Big
I
change.
didn't mean to geek out, but it was one of those things that accountants need to be aware of if they're also going to be having their clients do research credit, because when they're preparing the return, a lot of times they have the return in the process of being ready and then they throw in the research credit. It may need to be modified before they start to finalize the return.
Well, and that's the first question that our clients ask is how much is this going to get me? Right? So now we have a different playbook of saying, uh, I would always give like a general 10% of qualified research expenses of what the credit would be. But now I might have to lower that a little bit and saying, hey, the benefit might get stretched out some based upon these new amortization rules.
Well, you also could, instead of taking the amortization, don't forget if you're in a current year, what you do is instead of taking that full amount of the credit, there's an election that you can take a reduced amount of the credit so that you wouldn't need to go and do that. So, I mean, there's all these different intricacies and different rules that we're aware of. So
Yeah.
we're able to help our clients become aware and help educate the CPAs.
Yeah.
I will stop nerding out on that stuff. And I can
Well, no, that's actually
talk in
really good
general.
because I think if our CPAs are
that's
talking to
helpful.
our clients about the R&D credit, that's always one of the first questions when you're talking to them. How much is this worth? And I might be a little bit more
Yeah.
conservative on saying this is how much you may be getting in terms of like tax dollars back.
Well, Dave, another point that we usually like to bring out is we represent the company. So if you have, say, an S corporation, so you have a taxpayer that has a pass-through entity, when we prepare the credit, we're preparing it for the company. It's the CPAs that really do the K1s. So they do the allocations, same for partnerships. So it's hard for us to estimate what their actual benefit is going to be. And that's when we do look to CPAs to say, we can tell you what the amount is for the company. How that flows through to the individual owners or partners is not something that we can determine because, one, we don't know if there's different allocations in a partnership agreement, who gets what. Things aren't always even cut or based on proportion of ownership. So that's really something that is important for us to work with the CPAs so that the client gets a better understanding from the outset that no matter what the number is we give, if it's a flow through, it's going to be different. It's also, there's alternative minimum tax. So there's a whole bunch of other factors that whatever that number is might not be the actual number because of specific circumstances to an individual.
Yeah, that's right.
Jen, are the changes enough that where the R&D tax credit for the year 2021 was worth pursuing that you would say it may not be worth pursuing for someone because of the
2021
change?
is still fine. It's the 2022 tax year, so it
Right.
really doesn't take effect until 2023. We're also very hopeful that this will get reversed because there are so many people in opposition to this. And you have to keep in mind it came under the Trump administration. And so we've got a different president in office who is very much into research credit, innovation. If you remember, it was Barack Obama who actually made the credit permanent and also gave other benefits to the credit back in 2015 with the PATH Act. So we are hopeful that it might get reversed. It's just that it's probably not on the radar right now as being as important. There was legislation in, I want to say, the beginning of this year, or beginning of last year, in February, that has asked for this to be reversed, but it's kind of just sat nowhere going. It's been an introduced bill that we've been watching as well. So we are hopeful that this will get reversed. In the event it's not, we are prepared to be able to adapt these new changes.
Okay.
And I think there was 2 educational tidbits. What was the next one? Because I think this one is also pretty pertinent to CPAs.
Yeah. So this one just came out in October, effective for January 10th of this year. The IRS, they don't want to just go through research credit claims anymore. They're going to put the burden on the company, on the taxpayer, to provide new document requirements with the actual filing of the income tax return. The IRS claims it's only for refund claims, but we take a very conservative approach, and we feel that it's also for current claims because you could still be getting a refund on a research credit claim for a current year. So we've been taking the approach that for all clients and all filings effective after January 10th or on January 10th and thereafter, we want to comply with these new document requirements. The new document requirements are basically you have to have a narrative that is attached to the income tax return that goes over every business component, so every type of project that was worked on in that year that you're claiming, every individual that worked on that business component, what their activities were, so you're tying their activities to the amounts of expenditures, and that needs to be included. You also, they say the actual form will go over, what the qualified research expenditures are, but they want this narrative. And we at Leyton always prepare a technical report that goes through and walks through what that 4-part test is, how you qualify. But the IRS has now said that just submitting a technical report isn't sufficient. They will reject that claim.
They're
If you
getting ready
submit the
for
technical
companies like Leyton that they've been doing this forever and what they already have from just attaching it. Is this kind of like, are they trying to get ready to,
Well,
are that,
you never had to attach it.
yeah.
You never had to attach it before. It was you had this in your back pocket in the event you got audited.
Yes.
So this was always something that you had in the event of an audit, but you were never required to include all of that backup information. But the IRS is now saying in order to just even process or validate your claim, we're going to look for that narrative. If for some reason you want to throw in your technical report, you're still going to need in a narrative references to the exact pages where everything that they're looking for is. So it's one of those things where they're trying to put the burden on the company, on the taxpayer, to identify everything. And keeping that in mind, that doesn't mean that the credit is automatically approved. It's just saying, have you followed the procedural requirements that we're asking you for? Did you include all the employees, what their activities were, and then we can go and put it in for processing.
How many narrative writers have you hired? Because I know I don't feel like writing a lot of these narratives if we have a specialist on board.
That's what we do.
Okay.
So that's what we do. There's a lot of issues, though, because we have clients that we've done statistical sampling for, so that means that there's been lots and lots of projects going on. So over hundreds to thousands.
Wow.
And so we're still waiting on guidance. Does that mean we have to write up every single one of those reports? And that's something that nobody knows at this point. And this is so relatively new. So that all that really came out was that October 2021 issuance. And so IRS, like everything, says it's forthcoming. Guidance will happen. But in the meantime, what do we do if we've got a client that has 1,000 projects and we want to file that before, a February 15th deadline? It's after January 10th.
Well, that's interesting. I mean, what I've learned, like with all these tax changes, like I always feel like I always want to be ahead of the curve on like knowing like these new rules. And it's like, okay, our clients expect us to know exactly what these rules mean, and they have a point. But at the same time, sometimes you just have to take a step back, wait a couple weeks or a month and say, usually cooler heads prevail on some of these things, and hopefully that's a lesser of a burden. Now, do you think they put all these new rules in because people were getting too aggressive with the R&D credit and they want some more collateral to come audit people? Like, are we setting our clients up for failure by doing some of this R&D credit work?
I think a part of it is that they've been burdened with, by the time that they select somebody for an audit, they feel like we could have already eliminated this at the beginning if somebody had put all this information in. It's hard to tell because we don't have any brain work at the IRS to know what they were thinking, but it's our understanding that it was more to ease their administrative burden, and maybe they'll be more selective with who they audit, because if we're able to put everything that they're looking for at the beginning, hopefully that's enough to help substantiate a claim and put it through, as opposed to others that they might have some questions on, that they'd be able to look at that perhaps at the get-go and say, we need more information on this. Because keep in mind, as I mentioned before, all you'd file is the form, which had numbers on it, so it didn't really give you much background information.
No,
and it was whether or not the IRS was interested.
Yeah, that happens a lot. I think some of the states that we have to do the credit for are a little bit more onerous on the type of information that they need. So that's great. That was great. Thanks for that education, Jen, at least for me. Tom, I don't know if you blacked out during it, but I thought it was riveting, so that was great.
Have a cup of
No.
coffee, wake up.
Yes. No, I found it very interesting, but it does sound like a higher burden that's coming. And I'm interested because I do have some clients, not with thousands of projects, but with a lot. And we've done sampling. And the thought of getting detail on every single person is difficult. And the clients stay engaged, but they don't like this level of detail either as we go through and describe projects and
to make it
what
even
people did
worse,
and the things.
to make it even worse, you've got independent contractors, right, who sometimes help do the work. You're going to need to find out exactly what they did, because it's not just employees. You need to find out all individuals what they did, and that's not always easy to assess, because if you hire, say, a consulting firm, you don't know what employees were working on. You hired them for a purpose to, say, complete a software or help you with code. You may have retained the rights to that code, but now you're going to have to put in detail for what their employees, which are your contractors, we're working on that project. So we are hoping for more clarification because of this onerous burden. And we're not alone in this. So there are other practitioners who are feeling the heat as well and hoping for some further clarification to ease the burden.
Okay.
That's
That
great.
makes a lot of sense.
Yeah, this has been great information. Yeah, thanks a lot, Jen. Well, how do so
My work is done.
I would say
Yeah.
one more thing, like how do we get in touch with Leyton to say like let's get rolling here, and
You can email us at sdteam@leyton.com. So the two letter S, letter D, team@leyton.com. You can call us. Not many. I can't say we've got a phone call in a while. That seems to be a thing of the
So-
past. But you can always call us.
We're an
Oh,
electronic world.
what's that?
And you can always visit our website, which is leyton.com. And we can't wait to talk to you guys.
That's great.
Maggie, is there any particular kind of, I don't want to say niche, but are there certain types of CPAs that you're saying, okay, maybe not as good of a fit, or is it more you're open? And I'm thinking of like sizes of firms, sizes of clients, anything like that.
No, I think that's a really nice thing about Leyton. We're here to work with anybody who's a good fit for the credit. We really are believers in what the credit actually does for a business and the growth that it allows them to have. Because it really, for a smaller business, it can make a huge impact in like an early stage business for them getting through the year or getting like to the next round of funding. And that's what we're all about. That's what Leyton is about, actually helping. During COVID, I think we were able to source about 1.5 million for our clients.
Wow.
So this credit's a big deal.
That's great. That's great.
Good.
Well, this has been awesome. Yeah. Jen, did you say you had one more thing to say? No,
No, I said I was done.
Oh, you were
I said
done.
my
Oh,
piece.
okay.
Okay.
Whew. All right. No, that was excellent.
Got my points across.
That's great.
Yeah, this has been really good. Thank you. I think good
Thank you,
overall
guys.
education, but then with changes coming, that's really helpful. I think it's going to be really useful to a lot of our audience.
Very good.
Thank you guys very much. And please, if anyone wants an education, you've got a whole team at Leyton who's happy to give it to you.
Very good.
That's great.
All right. Well, thanks everyone, and we'll see you later. See you next time.
Enjoy this podcast? Visit our website at summitcpa.net to get more tips and strategies for achieving tax success. We're here to be a resource for you.